Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Tony Zhang, chief strategist at OptionsPlay, to discuss if current volatility is contained to just high beta stocks and option strategies to trade the trends. Tony, it's great to see you as always. Welcome back to Trade Talks.
Thank you so much for having me. Looking forward to talking a little bit about the rotation that we're starting to see in these high beta sectors.
And that's exactly the first couple of charts I want to take a look at with you. Let's discuss that rotation trade. Of course, growth versus value, the Qs versus IWM.
Yeah, exactly. So the headlines really have been on the interest rates, but what we really want to talk about is how has that impacted equities. And so far, what we're seeing is that the rotation or the sell-off that we've seen in the markets or in equity markets have largely been only contained to these high beta tech stocks. As we've seen, the QQQs are down 7-8% from their all-time highs, but so far they are still holding a pretty significant support level here at around 298 or so, which has been a resistance level since October. But the fact that we are just holding that level, we're not being able to rally, that's concerning for me. But on the flip side, a lot of investors are asking, is this going to spill over to other segments of the market? And when we look at small caps, we continue to see a lot of strength here from small caps. So this leads me to believe that what we're seeing right now is simply just a rotation. It's not a forming of a major market top where all the major indices are about to roll over. And subsequently, if we look at RSP, which is the S&P 500 equal weight index, making new all-time highs, as the Nasdaq 100 continues to sell off. Even from today, we're seeing the small caps rising intraday while the Nasdaq 100 losing some ground here. So when we look at this on balance of the major indices, what we're not seeing is the formation of a market top. More likely, what is this? Just a simple rotation out of these high beta tech stocks that really have performed very well over the past year or so, pulling back a little, consolidating before potentially moving higher. And lastly, if we look at,
I'm sorry, go ahead.
If we just look at VOLQ, which is the Nasdaq 100 volatility index, it is relatively elevated here at about 29%, meaning that investors are somewhat fearful here, but it's fairly stable. So this also leads me to believe that the sell-off that we're currently seeing is relatively contained, that we're not going to see a huge acceleration to the downside across, the major indices.
All right, Tony, beat me to it. That's what I was going to ask you next on VOLQ. Let's switch gears to fixed income. We've also seen a shift to composure there as well. What's happening with investment grade bonds?
Yeah, so I will say that despite looking on balance, when we look at the major equity indices, things still look relatively healthy. When I look at the fixed income markets, this is the one aspect that is concerning to me about the broader equity rally that we're in, because we've seen the sell-off in treasuries. So that makes sense in a risk-on environment where fixed income investors sell safer fixed income assets. But typically what we would see is bid up in more speculative investment grade, high yield. But what we're starting to see is selling across the board. And this is extremely exaggerated here on the investment grade side. LQD selling off pretty heavily here over the past few weeks alongside treasuries. So this is the one part that is concerning to me, meaning fixed income investors sending us a bit of a warning signal that it's not just all risk on for fixed income investors. And that is concerning to me for the broader equity rally. And I think from my perspective, looking at all of this on balance, this puts equities in a much more neutral state at the moment and potentially shifting down to a bearish state if we break below some of those major support levels I was referring to.
And let's turn to the trades. The first one is capitalizing on the strength in real estate. This time you're looking at a diagonal spread.
Exactly. So in this type of market environment, especially when we're more neutral, we're seeing a substantial outflow in some of these high beta sectors. My preference is to be more on the defensive, looking at assets that are more interest bearing, such as real estate or utilities. So Avalon Bay is a REIT inside of XLRE, one of the stronger, more defensive sectors that we're currently looking at, outperforming the XLRE sector. So those are the types of opportunities that I want to seek in this current market environment. I'm using a diagonal, as you said, because right now implied volatilities are still relatively high. Buying options are not cheap. So one of the ways that you can offset the cost of buying a call option on a REIT like Avalon Bay is to sell shorter dated options against it. So here I'm going out to July and I'm buying the 180 calls, but I'm selling the April 195 calls against it here, paying about $10 for a stock that's currently trading at about $182. So paying just a little over 10% of the underlying stock's value in order to take a bullish bet here on Avalon Bay.
All right, and our last trade is in the software space to the bearish side with a strategy in Snowflake.
Yeah, exactly. So right now, what I'm really focusing on are these high beta tech stocks that have not seen particularly strong revenue growth, that isn't profitable. And names like Snowflake come to the top of the list for those types of names that have not sold off that heavily actually over the past few days. So these are the ones where I'm expecting to see more multiple contraction, especially if interest rates continue to rise or even stay around this 155 basis point level here for the 10-year yield. These are the types of trades that will continue to get compressed here. So I'm using a put vertical here, looking for a potential acceleration here to the downside, especially if we see the Qs break below some of those major support levels. These are the stocks that are going to fall apart very quickly. So here I'm going out to May and I'm buying the 235-170 put spread, also doing a spread here because the implied volatilities here are fairly expensive, trying to offset some of that expensive volatility by selling that 170 put against it, paying about $23 here for this debit spread. That's about $65 wide. So paying about a little under 40% of the width here, looking for that acceleration here, the downside, while limiting my risk to roughly 10% of the stock price.
All right, Tony, to wrap up here, how can Trade Talks get in touch with you?
Yeah, so for investors who want to continue to see analysis like this on the broader markets, looking at trades that I find just like these on Avalon Bay and Snowflake, you can sign up for a free 30-day trial to OptionsPlay at trade.optionsplay.com/trade talks.
All right, Tony, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.